All right, Morgan, look at this. This is the Bitcoin 1 hour chart, and it's an absolute work of art if you're a bear.
Yeah.
If you're a bull, well, you're probably crying in a corner somewhere. A work of art is one way to put it. I'd call it a crime scene. From, what, $68,500 down to $63,000 in what looks like a single brutal plunge. This is what happens when leverage gets flushed from the system. And somebody called it perfectly. Shout out to the Big Short Net on TradingView. See this big red block up top? Khang Ku. Right. For those who don't speak Vietnamese, that means resistance. And right next to it, the beautiful, simple word short. Appreciatively, chef's kiss. I bet you were one of the guys who shorted it, weren't you?
You've got that smug look on your face.
Let's just say my plan wasn't to be a hero and buy the top, unlike half of Twitter who were probably screaming for 75K.
Oh, yeah.
Look where that got them. The price didn't even blink at the S1 pivot around $65,400, just sliced right through it.
That S1 level was the line in the sand for a lot of people.
Totally. That was the last chance for the bulls to hold on. Once it broke, you can just see the panic selling. See these long red candles? That's not institutions carefully de-risking.
Nope.
That's retail traders getting liquidated and rage smashing their sell buttons. And this is my favorite part, right here at the bottom. The current price is hovering around $63,155, right on the S2 pivot.
Okay.
And the chart has this little note, Dung Bat Dai. Let me guess, that's not by the dip in Vietnamese, is it? Not even close. It means don't catch the bottom, or to put it in our terms, don't be a moron and try to catch a falling knife. Right. The creator of this chart is literally telling you that buying here is a terrible idea.
And he's right. The temptation is huge, though. You see a support level, you see the price is down a ton, and the little goblin in your brain whispers, this has to be the bottom, right? This imagine the gains if you buy now. That goblin is how you get wrecked. That goblin wants you to lose your money. In a market like this, you have to tell that goblin to shut up. There is zero, and I mean zero confirmation of a bottom here. Nothing. No bullish divergence, no reversal pattern, nothing. Just a straight nosedive into a support line that might as well be made of paper. So let's make this practical. Forget the goblins. What's the actual plan? Let's say you're sitting in stablecoins, feeling smart because you're not down 10% today. Yeah, what's your move? I'm a predator waiting in the bushes. I am not, under any circumstances, clicking the buy button. My entire focus is on finding the next high-probability short. Okay, so where is that? Shorting here feels like you're chasing the move. It's already fallen so much. It is chasing, which is why I'm not shorting right now. For me, there are two primary scenarios. The first, and my favorite, is we get a relief bounce back up to the scene of the crime, that broken S1 support around $65,400. The retest. The bulls who are trapped will try to sell at their entry to get out at break even. The bears who missed the first move will see it as a gift from the trading gods. The confluence of sellers at that level will be huge. Wow, I'm looking to pounce on a short. A clear rejection there is an A+ setup. I like it. Clean, defined risk. If it blows past 65.5K, you know your thesis is wrong and you get out. What's the second scenario? The less patient one. The second one is the path of maximum pain. If the selling pressure is just too intense and we don't even get a bounce, if we start seeing the H1 and H4 candles close below this S2 level, say below $63,000, it's lights out. It's lights out. There is no significant support on this chart until you get down to the big psychological $60,000 level.
Right.
A break of S2 is confirmation that the sellers are still in complete control, and I'd consider a momentum short on the breakdown targeting 60K. It's a riskier trade than shorting the retest, but in a market this weak, it often works. So a bearish bias no matter what. That's some refreshing honesty. Yep, most channels would be telling you to accumulate for the long term down here. Scoff. Accumulating in a downtrend is just a fancy way of saying losing money slowly. Yeah, we're traders, not long-term investors. Our job is to make money from volatility, not to believe in the asset. And right now, the direction of the volatility is clearly down. Which brings up a good point. A lot of people watching this probably got caught in this move. They bought the breakouts or they bought the first dip, and now they're just holding on for dear life.
Right. What do they do?
Look, this isn't financial advice, but if you're in a trade without a plan, you've already lost. If your plan was buy and hope, then hope just failed you. The professional thing to do is to respect your stop loss. If you didn't have one, then you need to seriously reevaluate your entire approach to trading. Harsh, but true. This is exactly why we always say process over profits. A good process would have had you out of that long position ages ago. Exactly. A bad process has you holding a losing bag, praying for a bailout. And that's really what we do. This entire conversation we just had, mapping out the key levels, defining the if-then scenarios, waiting for a high-probability setup, that's the whole game.
Right.
It's not about being a psychic, it's about being prepared.
It's about not being the guy who's panic selling at the bottom or the guy who's trying to hero catch a falling knife. Yep, it's about being the guy who's waiting calmly for his setup.
Exactly. And look, if this kind of no BS practical approach to trading makes sense to you, and you're sick of the hype and the fake flexing, we've got a place for you. We run a private group where this is all we do, build high-quality trading plans for setups just like this. There's no get-rich-quick nonsense. No, it's just hard work and solid technical analysis. If you're ready to treat trading like a serious business, click the link in the description and send one of us a message. We'll get you sorted. But if you'd rather keep catching knives, by all means, have at it. Let us know how that works out for you. Now, before we wrap, we want to leave you with a question to think about. We've laid out two clear scenarios, a bounce to re-short or a breakdown to short. Right, but there's always a third possibility, the unexpected. What if the market consolidates here for days, grinding sideways and chopping up both bulls and bears? So here's the question we want you to think about. In a volatile market that suddenly goes flat, how does your trading strategy adapt to avoid getting chopped to pieces while you wait for the next big move? Think about that, because the market's job is to take the most money from the most people. And sometimes it does that not with a big crash, but with a slow, frustrating grind. Yeah, stay safe out there.